Good evening, YouTube. Good evening, Facebook. Good evening, Twitter. I've had a couple of responses from people who have enjoyed my video and got a little information, and that's all I'm really trying to do. So tonight we are wrapping up. This is part 9 of a 10-part series of the 10 biggest problems new owners make when buying rental property. So number 9 is not planning or doing your accounting for CapEx. And CapEx stands for capital expenditures. So most of the time when we hear that term, it is used with bigger businesses. So we're talking commercial real estate and so on and so forth. But for the purposes of this, there are some things that you will need to use as capital expenditures in residential real estate. So I want to make a disclaimer that I'm not an attorney, I'm not an accountant, so we're going to keep this very brief. I just want you to know that it is necessary to include capital expenditures in your accounting because you're going to have this issue, okay? And it's a tax issue. So when you're running a business, as you are with real estate, for rental income, you are producing income and you have all different types of expenses. So books need to be kept, and that is the purpose of this. So being that capital expenditure a lot of times is related to commercial and major corporations and things like that, we tend not to think about it with residential property. But that's not the case. It's a business. We need to treat it as such. And so capital expenditures need to be included in your books. All right? So what is a capital expenditure? Well, a capital expenditure is any asset that is bought that is going to profit or make your company more profitable. Okay? So we could be talking about buying a new building. We could be talking about computer equipment. We could be talking about office equipment, software, or we could be talking about vehicles. All these things will make your company a better company. And these capital expenditures can be used for more than a year. So when things can be used for more than a year and they make your company more profitable, it is called capital expenditure. Now, we also have what they call operating expenses. All right, and there's a difference. Okay, and again, this is tax purposes. So operating expenses are things that your business needs to run daily. Okay, so when we talk about what do your business need to run daily, we're talking about salaries, we're talking about rent, we're talking about all the different things that your company needs to run on a regular basis. And these things, for tax purposes, will be recorded in the same year. Whereas capital expenditures are over a longer period of time. So they don't get recorded in that same pay period or that same cycle, that same business cycle in that same year. So the difference is operating expenses are used for the daily operation of the company. And those will be recorded at the end of the year. Okay? So with that being said, it's very clear that this is a accounting issue. And again, as I said before, this is a numbers game. You have to play your numbers. You have to do all the math that is needed for these issues. All right? So really that closes it out. I'm not going to get too tough in this because like I said, this is an accounting issue. I'm not an accountant, but I just want you to include capital expenditures in your accounting workbook. it needs to be done. You need to get an attorney. You need to get an accountant, all right, who will clarify these things for you, all right? So with that being said, I'm going to close out. So it's important and imperative for you to understand that capital expenditures are things that will make your company better over time, all right? So if you had a house and you put a roof on, that roof would last you for years. That would be considered a capital expenditure, all right? Routine repairs would be operating expenses, all right? And these are the things that happen on a consistent daily basis to keep your operation running. So with that being said, this is Adrian. I'm going to close out part 9 of the 10-part series. You guys take it easy, and I'm going to see you shortly to close out with the 10th part. Yankees won tonight. Go Yankees.